The genesis for Bank Assetpoint was really came from our network of banks. We have a network of 3,000 banks that we work with daily and weekly on other types of products and solutions the company offers. But in focus groups, we found that there was a huge need for banks to get higher visibility and meet different types of market participants for distressed assets, be it commercial real estate especially, as well as distressed loans, non-performing loans. In addition, what we heard from the banks was that as the market's starting to turn, they're looking to buy new assets as well, whether that be in the real estate space or the C&I space or consumer space. We came up with a solution which we call Bank Assetpoint. It's an online solution that has a couple of different elements. One's a marketplace in which banks can come and post their offerings, and buyers can come and look at those types of assets they want to sell. And then also a community side which puts people together. And when I mean put people together, I mean the brokerage community, loan sale advisors, other market participants that would want to do business with these banks. There's a whole sub-performing market of assets, whether this be loans that were modified, both in the CMBS market as well in the bank market. Many loans are kept alive by the low interest rate environment. I think the commercial real estate brokers and loan sale advisors do a very good job of building relationships. I think this side of the business is going to be a good percentage of the business on a go-forward basis for years to come. These assets won't come out all at one time. We've seen the flood is not happening. Probably wasn't intended to happen. I think the government did a good job of keeping rates down and making this market move a little slower on the distress side. So I think that commercial brokers should have a closer relationship with bankers because there is more product to come. I think the future, the buyer pool, is different than maybe what it was, pre-crisis. Today, there's a lot of money chasing these assets, both performing and non-performing. Everybody's looking for yield. We see a lot of uncertainty in the stock market. Even though it's at an all-time high today, I don't know that there are a lot of people that are on the real estate side that are investing heavily in the stock market today. I think they're still looking for good assets in the commercial sector. There's abilities to get to some of these assets by buying the loans, and we think that a lot of folks have done that. And the folks that work day in and day out with commercial real estate, I think will still find good deals. They'll find plenty to work on. Some of these assets still need a lot of work, and I think that will continue as we go forward. I think from the banking perspective, I think there'll be a lot more spreading of risk. I think that the loan syndications, loan participations, I think will be things of the future. It'll be ways for banks not to take high concentration risk in many of these assets. I think there'll be structured financing whereby the appropriate amount of equity will come in from, potentially a professional investor or a different type of entity. Even some of the private equity might provide some of this equity, and then we match the loan. And we may have to put a little more equity in certain assets and less equity in others. But if we can get these loans to look more conforming for banks to make these loans or other types of lenders, I think that will fill a lot of the market on a go-forward basis. CMBS is back. It's still working, but it works a little differently than it did before. And I think, again, across the board, the underwriting is tightened up on all different types. But if we can create products for banks and other lenders that fit the mold they're looking for, I think that could be hugely advantageous in the future. And I think it will happen.